Okay, this is AKI, African Iron. Didn't have a lot of data for this, so maybe this is I've only got till January this year. Anyway, look at the weekly. There's a real high volume bar, so we'll mark that off as a mark off the low of that bar, and that's resisted the price now. Okay, so it got sold off early, looks like, and they didn't start really buying it till you see some interest coming in here at this low. Volume kicks in and it closes high. Looks like they start pushing as well. Still volume kicks in, and then they push up. Push up. Looks like they've retested into the top of that bar. Push up. They're still pushing. Where are they? It looks like when you see high volume, that means professional money are very active. And we see volume is the activity of the professional money in the market. When we see high volume, smart money are very active. And when you see high volume on an up bar, we're very cautious that perhaps there could possibly be offloading into that up move, because that's the only way they can offload in a hurry, is into an up bar and buy on down bars. That looks like volume persisting, but you're getting no result there. So that's a little bit of a worry. I might go to the daily just to see what's going on. So I'll get rid of that line there at the moment. Well, I'll leave it there. We've got another one just above there as well on the daily, the highest volume bar on the map, so that'll resist the price. Okay, we've had a bit of accumulation here. There's a down bar. It's closed high on high volume, so we've got interest happening there. Taken it up, supported the price, yanked it down, and we've got this high volume up bar. It's closed low, so it's catching supply. We're very wary here that this is being sold into, and certainly it's being sold into, but you have these areas of supply to your left, so it's either smart money are selling into demand from the herd, or they're absorbing demand from trapped holders. It can be either one. That's why we don't generally try not to buy these bars, because they're deadly. But if a weak bar is confirmed by the next bar being down, the next bar goes up. It's still catching supply though. These are up thrust, so these are weak bars, and they're full of supply. But because it looks like they've supported the lows, so these are actually absorbing that supply, so they've been happy to accumulate here. Then the next bar goes up again, and then we get strong bars. These are down bars on low volume. So they're testing the volume in that bar, pushed up, mopping up supply. So it looks like they've been absorbing the supply in this area, pushed through. Once they got rid of the supply, they could push through a lot easier than this, see? And then they've brought it back to mop it up. That's what that looks like there. And they've gapped it up. Again, weak bar, encountering resistance. They've actually moved it up very quickly now, so they're avoiding. Whereas here they're absorbing supply, here they're actually trying to avoid supply. So I think they might have got a fair whack here. They've certainly got a fair whack there. And now this looks like they're taking it up to a target, because they're not spending any time. They're spending as little time as possible absorbing. They're just whacking it up real quick. I'm starting to get some weak bars applied. See, that's really weak bar there. I think they've started selling off here, but the next bar goes up, so you can't really say that. Next bar goes up on high volume. Next bar is narrow spread, so I think that's it. Volume persists, but narrow spread, and they should be able to. The thing is, they should be able to bust through there. On that much volume, I would have thought. So that could possibly be a target sell zone for them. What's happened next? Okay, let's see what's happened next. Okay, we can see them working the price push up, absorb supply, push up, push through. It's expensive doing this, see? That means they're investing in a higher share price when they spend time at a high like this, absorbing supply from the left, so which is good, but then they haven't spent a lot of time taking it up. That with target resistance. Narrow spread is selling, that's a weak bar. All up bars on high volume are potentially weak. High volume equals supply. So it's come up, it's closed high, so that's okay, but then this one is closed off its high. Narrow spread selling. So are they trying to push through again? Next bar closes down. So we've had a lot of effort for no result now in these three bars. And this, okay. That is a no demand bar. What that tells you is they've stopped working the price. But it's risen on really light volume. That tells you they've stopped working the price. If they're trying to absorb all this in a hurry to take it to break it out, if this was a campaign to break out above there, they would not let the price go. They'd be continually working this because it's expensive. So here they did it because they're happy to absorb, spend time there absorbing, because that's their they're investing in the share price now. But here they've moved very quickly because it's expensive. They bought down here. They don't want to be buying in between, and that's what these quick moves are designed to do. So they don't stop. Once they want to go, they either stay there and accumulate the price. If they're stopping, they could be accumulating the price at that level, happy to absorb over a period of time, or they'll move it really quickly up to a target zone. That tells you that they've stopped pushing, because it can't do that. It's like Coles and Woolies going out to buy a carton of Coca-Cola. Coles and Woolies don't go out and buy a carton of Coca-Cola for a high price. They buy by the truckload. So that going up on really low volume tells you that they're not working the price. But they can go down on low volume. It's okay because they'll test down to exhaust all the supply. So you can have a down bar on low volume. That shows you that they're possibly working the price. But you can't go up like that on really low volume. So that just means they've taken their hands off it. So they're not going to bust through here, I don't think. And it looks like we've had this bit of a spurt here, but look, it's no result. They've capped it in the top there. That's what it looks like. They've capped it in the top there. I'm not interested in this going any higher. But we've got effort again to rise, but it's at a lower price. So it looks like they're getting all their sell orders fit. But not necessarily. It could mean that they want to spend time in this area absorbing the supply, because you've definitely got a lot of trapped holders up here. They might want to spend time like they did here, absorbing the supply in that area. And that would be a good thing actually, because then that would mean, if it could hold this bar here, where's your last really high volume bar? If it could hold above this bar here where they push through, and it just consolidates above 31 cents, and that would be good, because that would indicate then that they're investing, they're willing to absorb, they're going to spend time absorbing the supply in this area, and they'll try and take out locked holders up here and do all sorts of fun and games tricks. But if they hold above that bar, then that would be a good thing, because that would suggest they're accumulating at a higher level, investing in the share price because they want to take it up another leg. But if they're all done and all finished, then that'll collapse. So that's what you've got to weigh up. They've gone up, bought a lot of stock here, and then started distributing in this zone here. And they're all done and all finished, then they'll just let this go till its price comes attractive to them again. We've got all this high volume bar down there, so maybe for the low of this bar here as well as support at 27.5. But if it holds at 31, I think that would be good. That would mean they're willing to absorb, but it's not going to break through. I doubt very much it's going to break out above the 36 in a hurry. I think they'll move. At worst, they'll just drop to wherever they want to buy it again, but at best, I think this will move, has to move sideways while they absorb the supply, if you're lucky. That's what they want to do. We can only guess. But this is telling me, this here tells me they've taken their hands off the wheel. Now they're not interested in taking out this line. Because otherwise, if this was effort to take out that line, they've just done their money. It's very expensive, but just done their money. They've taken their hands off the wheel. I'm going to start again. So that's going to spend some time absorbing, I think. So if it holds above the 31, that'll be good, but it won't take out that 36. I doubt very much it'll take out that 36 in a hurry. Okay, this is EXS, Exco Resources. What can we do with this? I'll just put a pitchfork on it for now. Take it from the low to the high to that low. Came up, didn't come back to the medians, but I don't see. This actually is a strong thing, but we're up here now. Let's check the, I wonder if that's a valid pitchfork. Well, it's a high, low, high, so it has got a touch up there. I'll just check this parallel and see if we get any touches going back. I'll put it onto there. We do, oh look, we caught that pivot there. So 1, 2, 3. So you could probably argue that sometime in the future those parallels will be come into play, but I'm just going to get rid of those at the moment because they're just in the way. So we'll just zoom in here. Here's a really high volume bar, so I'll mark that off, the high of that, so it's well above there now. And there's one just after it, second in command. That's acted as support, and it's actually moved, moving it up. But then we have this nasty one here. See the high volume, all high volume up bars is the suspect are potentially weak, because high volume doesn't matter whether it's down bar or up bar, narrow bar. High volume usually includes supply. So high volume up bar, that looks like a bit of a buying climax there. That's what we call a buying climax. It's a new territory. There's a lot of excitement. Must be some news, but it's closed well off its low, and that's knocked it sideways. And that's been sold into. That's smart money selling into it. But it's staying above supporting the low of that bar, so that's actually a good thing, because that would suggest they're investing, reaccumulating to invest in the price, in a higher share price. The ultra high volume bar comes down and lower, well, they've let it go. It's tried to get a button below there, but they've supported it. We've had a bit of a 2-bar reversal there. It goes up to the line, catches supply, volume kicks in, but it's closed well off its high, so there's supply, there's up thrust. It's not ready to go above this yet. I think they're just going to sit here. And then we got really low supply, low selling. Next bar kicks up in response, but it's butting its head there. I let it drop. Buying comes in. No demand, tries to go up, bring it down. This looks like they're supporting it, aren't they? So you probably have to argue. You probably could move that to that's your resistance line there. You've got the top of that bar to act as a resistance as well, and the low of that bar. So that's the worry is if smart money aren't actually involved at all, it'll roll over and no demand. So that's the only worry. But there's been a lot of supply in the market lately, and this doesn't seem to be sold off like the rest of the market has. So that's actually, I'm inclined to think that's all right at the moment. There's no selling pressure in this area. Look at the daily. There we go, there's our bar there, hang on, and there's a big buying climax, and get rid of all these. EXS, hey? So there's our buying climax. It's a nasty one. Like you got a whole heap of trap buyers in it. Look, that's why you don't buy on these things, because they're distributed, especially when you're at a new high and you see one of those. See, there's no excuse for it, because if it was down here, saying you see one of those, you could say, well, maybe perhaps they're absorbing trap holders from the left, but there's no trap holders to the left there. See, so that's been capped. That's professional money capping that and distributing into the herd now. And that's what's knocked this into extended sideways movement. It's fallen off then. It looks like it's come back in and started reaccumulating down here. Where's that support coming from? From the gap here, isn't it? It's a bit hard to say because this big bar takes out the distorts all the volume. But anyway, it's gone up from here. Okay, here we go. Volume kicks in at this low here. They take it up and they bring it back to test. They don't support up. They bring it back to test the volume, light volume. They bring it up, mop it up, make sure there's no sellers there. Push through. They push through the bottom of this bar on volume, so that's good. Pushed up on volume, it's good. Let it drop. Testing, testing. Low volume where there's previous high volume. It's gapped up in response, but found there's a 2-bar reversal. So that looks like they're working it. It's been accumulating low volume. Low volume. That's sort of like that's a trap up move. And what a trap up move does, they do it to when they accumulate. That locks buyers into a bad position. And they do that then, because if they're trying to accumulate, they're trying to find new suppliers. So if there's a lot of holders and they're having trouble, they'll make these moves up and bring new buyers into the market, and then take them out, take out the competition. So they'll do this. They'll then try and put pressure on this position to take those shares back off them. So you see it there, up thrust, bang, that traps them in. I put pressure on the position. I'll keep putting pressure until the supply dries out. Supply gets really low. Push it up. Test, and as this starts looking promising here, pushed up. Test. Then it goes up on no demand, so we're not really interested in taking it higher yet. Push up, really a big up thrust. Let it drop. Push up. Yeah, look, that looks like it's accumulating. That's all you can say. There's nothing. It's holding while it's holding that low there, then I would say they're just going to sit there and accumulate and absorb all the floating supply they can. And once they've got enough, then they'll mark it up. They probably won't do it. You're probably expecting a bit much of it. It's done well because the rest of the market's getting sold, isn't it? It's holding up. But you're probably expecting a bit much of it for it to go up while things are not so good. But if the market turns around, and that's probably they probably keep doing this while there's supply around. But when the market turns around, they could this will be one of the shares that takes off, eh? I think, because they're not selling it with the rest of the market. So I think that's a look. There's your support at 63. There's your resistance at 68. Well, probably more like 67. Between 63 and 66, it's been going, and the market turns around, then that would be really good for it. And so your lower risk will be down towards the 63, I suppose, and there's not much more to say about that. I think that's okay. It's not being sold off, certainly, and they're just absorbing supply, and I'll be trying to convince these guys, as much of these guys here, to get out of the position as possible. Any new guys at these highs, I'll be trying to rack the price off them. That's why price swings. It's accumulation. It's designed for you to lose money, basically. That's what these movements are. Bring it up, you trap new buyers, and put pressure on the price to take it off them at a lower price. Sell to your buyers high, buy back off them low. That's what that's just what it's been doing. But it looks okay, eh? Okay, this is SDL. It's been hanging up there. I think they had a takeover offer or something, I hear. I'm not sure, but anyway, possibly. So I don't know what's going on with that. So that can stuff you up a bit, eh? I'll look at the weekly first, anyway. They've had this extended move up. Pushed up really quickly. It's a worry when they push up really quickly, because it usually means they're trying to avoid buying and taking it quickly to a sell target. See, they pushed here and they've absorbed a bit, pushed. See, when it's stepping up nicely like that, it means they're pushing, mop it up, push, mop up the supply, push, mop up the supply until it runs out. When it moves really quickly, you've got to be a bit careful then, because that's they're avoiding buying more at a higher price. Anyway, they sold on that bar there. That looks like a no demand, even though it could be a no supply, but they've stopped pushing. It's pushed up there and they've sold into it. See, if that was all buying that up bar, then it couldn't close like that. They could argue it's catching supply here, but the next bar takes out the lows. When they take out the lows like that, you know that it's all over. Gone down. They're buying this one. This looks like a massive big shakeout here. They're shaking out these guys out of the position, found supply, and they've let it drop. Until here. So, okay. And this must be the takeover here. But anyway, let's have a look at the daily. Okay, there's your shakeout there. Bang. Bang over 2 bars, it looks like. Gone up. Bang. Look, that's your problem. Yeah, I remember now. That's your problem bar. Very narrow spread. Very high volume. That's your signal to get out of town. Really high volume like that on an up bar is bad, always bad news. On a narrow spread, close off its high. If that was all buying, and it's not going to go, how can it go? How can it stop like that? How can it just stop dead there? If that's all buying, that'd go through the roof. So that's been capped. There's been an exit there. Look, it's come up to that level now. Again, they've gapped it up over that level, and there's been a takeover offer. Close on the high there. That's gone into an extended. See, after that, it was all over. Then you get these up thrust, high volume up thrust in that area. It's not going to happen really from lower volume. And you start shorting now, because you get no demand bars coming in. What the price is trying to go up on lower volume. High volume up thrust, lower volume beneath the high volume there. Go short. I don't know if you can short SDL, but anyway, that's knocked it down. Now you've had your takeover offer, but see, these are weak bars. It's closed in the middle, so it's catching supply from the left here, but it's pushed through, so it's okay. And that weakness was not confirmed by price going down, so that's being absorbed. 50 cents must have been the takeover. Was it 50 cents a takeover offer? I don't know. It's gone up, but the catching supply now, it's not wanting to go any higher. That tells you not wanting to go any higher. But normally what I would do, if I didn't know there was a takeover offer and I looked at that, I'd say, well, that looks like absorption volume because it's gone pushed through there, and the selling pressure's come off. But these are still weak because every time it tries to go higher and thrust up, it catches supply. Volume increases, but it closes off the low, so it's not wanting to go any higher than that, certainly. So I suppose if there's an offer on the table for 50 cents, that would make sense. So that's absorption, absorbed supply, gone up, found weak up thrust. But the high volume bar there is now acting as your significant support. Resistance lines. So that's what's holding up the price. It's held above the gap there, it's good. And but it doesn't look like it wants to go higher yet because it's high volume, up thrust, close on the low. It's an up bar, close on the low, so it's been sold into. It hasn't been able to get higher than that bar. Up thrust again on high volume, so it's selling, but still being supported. But anyway, that's what it looks like. If there's a takeover offer on the table, and that stuffs you up a bit, doesn't it? But at the moment, what I look at is well, it's supported above that bar at the moment. So what we're looking for then, low volume testing of that bar. We do get one there, but it's closed. It's probably a bit too high volume for me, but it's closed closer to the low. Next bar's gone up on more volume, slightly more volume, so that's okay. Come back, retested on really low volume, closed again on high volume, pushed, but caught supply. So yeah, so anyway, that's what it looks like. It looks like it's holding that level. But so at the moment it looks okay, because while it's above that high volume bar and supporting, you can't say anything more than that other than it's supporting, but you are getting, these are weak bars at the top, so they're certainly not wanting to take it higher at the moment. So there's not much more I can say about that. I don't like buying when there's a takeover offer on the table, because you really don't know what's going to happen. But certainly if you bought down here, you'd be very happy, wouldn't you? Anyway, that's me done.